Good morning, this is the latest market news. I am Uliana. Stocks in Asia rose on Wednesday, carrying over from Wall Street as tensions eased between Russia and the Ukraine. Japan's Nikkei stock average rose 1.1% in Tokyo, while Australia's ASX 200 rose 0.6% on better than expected fourth quarter GDP data. Australia fourth quarter GDP data showed a gain of 0.8%, above expectations for a gain of 0.7% quarter-on-quarter, and also rose 2.8% at an annual pace. On Tuesday, Russian President Vladimir Putin had ordered a halt to military exercises eased fears over an immediate showdown between the two countries. The Dow Jones Industrial Average rallied 1.4% overnight, its biggest one-day point and percentage gain since the US Federal Reserve announced plans to cut back its stimulus measures in December. In his first public statement since Ukraine said its Crimean Peninsula had been taken over by Russian forces, Russian President Vladimir Putin said that whilst he reserved the right to use force to defend ethnic Russians, there remains no such necessity at present. Sidelining fears of a broader confrontation, the greenback has been a major benefactor overnight, with the Japanese yen being sold off the back of improved risk flows. Despite the limited economic impact of a geopolitical conflict, currency markets' reliance on a stable risk backdrop has been there for all to see during the early parts of this week. With economic happenings across the US and broader Europe heating up this evening, the Euro-US dollar is virtually unchanged this morning at 1.3734, whilst the US dollar Japanese yen is higher at 102.235. There is no shortage of economic news scheduled for Wednesday, and three influential numbers will shape expectations today: retail sales for the Eurozone, US updates on private payrolls, and the services sector. US ISM Services Index 15 GMT. The hard data for the US economy may be showing signs of stress lately, but survey numbers for the manufacturing and services sector suggest that macro trend is stabilizing. The ISM Manufacturing Index rebounded in February, signaling a modest expansion for the cyclically sensitive piece of the economy. Also, today's update of the ISM Non-Manufacturing Services Index is expected to show a slight decline for last month. Analysts think it will remain well above the neutral 50 mark. It was the latest market news provided by ICO FX. Goodbye.